Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin from DecisionPoint.com, and I'm here with my father, Carl Swenlin, and we're going to look at the charts we think that you need to see going into this week. We like to tell you the trend and condition of the market, and then we look for the stocks and symbols that will ride that tide. All right, Dad, so let's go ahead and get it started. He's going to go over the market. I'm going to look at the sectors and industry groups. And if you want to request a symbol, that is in the Q&A box. And the chat box is for you. I do have a moderator in there, Fred. So go ahead and say hello to him. Just make sure that when you send a comment that you use the drop-down menu that sends it to everyone. And that's for the chat room. Q&A, that's for us. All right, let's go ahead and get it started.
Okay. My head's spinning from all the attention California's been getting for the weather. We're rarely in the weather news, but we've had a lot of rain and enjoyed it immensely.
Yes. And a little snow.
Yes, we did have snow in Southern California at 1,300 feet. So that's pretty unusual. It stuck for about maybe an hour or two. Okay, I wanted to start out with some coverage on the Golden Cross and Silver Cross indexes. Just to review, a Golden Cross index shows the percentage of stocks within a particular index, in this case, the S&P 500, that have the 50 EMA above the 200 EMA. And when I developed this indicator, I also thought we should have an intermediate term indicator. Golden Cross is long-term. Intermediate term, we've used for years and years. We've used a 20-day moving average and 50-day moving average crossovers as buy signals. And so that's our Silver Cross index, which is the percentage of stocks within the index that is above, the 20 is above the 50. So what I wanted to cover is that the Golden Cross index is the first of its kind that I'm aware of. I thought initially that the Silver Cross index was the first of its kind. And it certainly is in terms of using moving average crossovers. But there's another index, the bullish percent index, which I'm sorry, I cannot bring up who developed that, but it's been around for decades. And essentially it is shows the percentage of stocks in the index that has a point and figure buy signal. Let me just quickly review. There's a point and figure chart. I don't know what a buy signal is on a point and figure. I used to know. I gave it some attention, but frankly, the point and figure chart, I know people have used them successfully. It's just not intuitive enough, and I much prefer a regular linear.
Yeah, OHLC.
Yeah, so that's what it looks like. And here is a comparison of the bullish percent index and the Silver Cross index. You see the range is similar, and the direction is similar, except the bullish percent is much more active. You can see here we have, when we go into this bear market here back in 2020, the Silver Cross was fairly smooth about that, and coming out of it very smooth. Not so much, well, the bullish percent index was pretty sharp and direct, but then it got very active as it was coming out of that. So I'm not saying that the BPI is not useful. Some people use it. It's more, it tends to move a little faster. You'll notice on, let me put You notice here, it's where the BPI bottomed. Do you notice the Silver Cross Index was slower coming to a bottom? And but it still was fairly close to the actual price bottom. So anyway, that's the difference. And again, I think for my use, the Silver Cross Index is better and more useful to me. But know that there is something out there that's similar and maybe is useful, say, for more short-term discussions. Okay, let me get rid of that. Any comments before I dump this chart?
Nope, I think you're covering it.
Okay, get rid of that. Okay, and let's go to what's the market doing? Okay, the S&P 500, just using the SPY here. On Friday, we had a breakdown from the bull market rising trend line. That doesn't mean the bull market is over, and but it could be taking a break here. The only time we'll be absolutely certain is if it takes out this low, if this decline continues and takes out this low in October. It broke the trend on Friday. Notice that it almost made it back all the way up to the trend line by the close. And right now, we started out the day above the line and we're basically right on that trend line. So market's in a period of indecision here. The dollar index, again, we got a little indecision here. On Friday, it broke above the this rising wedge top, and it's back in that now, and it's being down from the prior day. It should be beneficial to gold, which it is. Gold is up slightly today. Gold is still in a correction phase, and I wouldn't declare it as being out of that yet. And certainly the PMO doesn't show that it's the decline is over. USO oil is basically in a trading range. Looks like a little bit of a rising, a head and shoulders pattern. And I'm not real crazy about calling head and shoulders patterns in a sideways movement. I like to see them at a top, like right here. That was a good head and shoulders pattern. This one is kind of in a sideways movement, and I wouldn't read it like that.
Yeah, one of the things that people should keep in mind is that those head and shoulders patterns are reversal patterns, meaning they have to reverse a trend. If you're going into it with a declining trend, then it's really not a head and shoulders anyway.
Right. Okay. Treasury bonds. This is the 20+ year Treasury bond ETF. It's had a decline. Right now, it's caught on this rising trend line. We had a sharper rising trend line here, but it's broken down from that. And right now we're using these two lows to project out here, and it looks like legitimate. But it's also got a support line coming up. So maybe this is done declining, but let me just go to a 1 year chart. And I don't find this as encouraging. We have basically
the PMO top above a low there, so it's sort of set up in a negative divergence.
That's what I was looking for. Notice there was a higher high and a lower high. Okay, so anyway, bonds, I don't think we're going anywhere great with bonds, and I'll demonstrate that a little later here. Here's the 10-year, had a period of decline and it broke out of that declining trend, and I think it's going higher. Just as evidence, I would use this yield array from the short term to the 30-year, and basically we've got all the periods are rising trend. That 1 year as that new highs. Dynamic yield curve should show this more often, but we're in an inversion here, and that's not good for the market. As far as the level of yield, historically, let's look at a long-term chart, and this takes a little bit longer to load, but historically, yields have been higher, and we've had this period with the financial crisis where they brought yields down to the basement. And where we are now, people are talking about looking for the Fed to finally start cutting rates again. I wouldn't look for that in terms of my own self-interest. I think we're in an area right now of normal interest rates, other than the inversion. The level is much more reasonable and I think healthy. Okay. Bitcoin, you got a rising wedge, came down to the bottom of the wedge last week, and starting to rise again. But ultimately, we would expect this to break down, and let's go to a long-term chart. Let's see, in terms of longer term, it's not looking so good, although it is definitely in a rising trend at this point. Looking at the big tech stocks, Apple has broken a rising trend line. Amazon has also broken a rising trend line. Alphabet, well past the rising trend line, actually broke it early this month. Meta Platforms, also in a declining trend, although from a higher level, and much more healthy looking than, say, the other ones we just looked at. Microsoft, if you draw across here, draw a line across here, it's slightly below the rising trend line, so it's broken the trend. Netflix, basically on this rising trend line, it just came down to it. So that's not an unhealthy situation there. NVIDIA, last week we had a big jump, which it is currently maintaining. And then there's Tesla, also looking like a top here. Let me just update that. No, this looks like around the top to me, and the PMO is top. Notice that the PMO is in a higher range than we're normally used to, especially with market indexes. Market indexes are usually maybe 2 to 3 plus or minus 2 to 3, whereas these stocks, they can actually go much higher than this. I've seen 50, a PMO of 50. All right. Have I missed anything, or is it time for you to
I
take?
don't think so. Since you have the Tesla chart up, I did read that there's going to be an investor conference or something to that effect for Tesla. So not earnings, but it could be really interesting to see how they come out of this with that PMO looking as ugly as it does. It's interesting when we mix the technicals and the fundamentals like that. I'm very curious to see how this is going to resolve.
Yeah, you know what? I looking at my notes here is one thing I wanted to cover. I watched last week, I watched the Founder, the movie, which was about the McDonald's legacy,
Oh, yeah.
Ray Kroc. And one of the things in 1961, he bought out the McDonald brothers, and they each cleared $1 million after taxes. Now, that doesn't sound like a lot today when you consider what McDonald's is, but let's face it, nobody knew where McDonald's was going to be in 1961. And if you and if you think about, okay, what would the $1 million equivalent be worth? How much money would it take to equal $1 million in 1961? Well, I look at the inflation tables, and basically 10 million today would equal $1 million in 1961. 10 million is pretty good, go to hell money. You know what I'm saying? It's again, it's not what anything like what McDonald's turned into, but it was a pretty good place to be in 1961. So,
Wow. All right. I am going to grab the screen.
okay, you got it.
All right. And you can start going through those questions. I did see one that I can tell you I can't answer. I don't know that you will either, but it's asking about pipe bottoms and pipe tops, which I believe are candlestick formations. And while I'm familiar with candlesticks, I'm not an expert, so I couldn't really tell you much about pipe bottoms and tops. If you want to look at that more closely, I'm going to go ahead and start the sectors up. But I know that that was just one of the first I noticed, and I need
Okay.
to study those more.
Yeah, I can't answer that question either. I don't know.
Yeah.
Don't know what that is.
It's kind of a complex pattern. I believe it encompasses, I think, 3 days or something to that effect. But I'll look that up and see if I can get you an answer next week. All right. So here are the sectors. Now, one of the things I do on Fridays is for my DecisionPoint Diamond subscribers, we have a live trading room. So if you like this, we do one on Fridays for Diamond subscribers, and it's an hour and a half. And one of the things I do is what I do here, which is look at all the sectors. And then I try and determine what sector do we want to watch. This week, it was a very difficult week to try and figure that out, because if you notice, all of the sectors pretty much have declining PMOs. All of the sectors have sell signals. There's really not any sector out here that looks good currently. So this tells me that there is no safe place, really. There is no true pocket of strength, at least if you're looking at sectors. That's a problem. Now, within, there are industry groups that are doing pretty well. So anyway, let's go ahead and let's dive in a little bit more closely on these. I'm just going to refresh my memory and see if I can figure out what it was that I picked last Friday. But if I recall, it was either between consumer staples, which you can see at least price-wise, they're moving mostly sideways. And there you can see a little bit of a symmetrical triangle here. Those can break in either direction. Unfortunately, they're continuation patterns, so they tend to just continue the prior trend, which in this case would be down. So, staples looked halfway decent on Friday, but Did they really? I mean, it's you're not seeing any improvement here under the surface with how many stocks are above their 20, 50, and 200. So while this is a defensive area of the market, it's still not attracting the kind of interest that we need in order to look for some stronger investments. In fact, if you look down here, you can see relative strength has started to fade. One of the others that I thought looked good was industrials. And I say look good, I mean not look as bad as the rest. So let me make sure that you understand that. But industrials I've been watching because we have seen some movement in marine transportation. I noticed somebody wants to look at that. And you can see that relative strength has been improving. But again, under the surface, we just aren't seeing the kind of action we need to if we're going to go and invest in a particular area. So it's still not very safe out there. Materials, I think, is what I ended up going with. And a lot of that had to do with this giant bullish engulfing candlestick. It engulfed 3 prior days. That's a very bullish sign. That suggests that you're going to get an upside move the next day. And that does seem to be coming true. Unfortunately, just like with the market, we're seeing these filled black candlesticks, long wicks on the top. Both of those are negative setups for a candlestick. So while materials look good and it did get a nice bounce today, we're still, it's still not great out there. But you can see that with materials, we're getting a little bit of a turn here on the PMO. I think materials, the big problem they're going to have is their stake in what happens with gold. And we looked at that gold chart, and Carl and I agree it's not looking too good for gold. It's been holding up somewhat well considering what's going on with the dollar, but ultimately it's in a bear market configuration, and so we would expect to see lower prices in gold. That's going to be a problem for the materials sector, but in spite of that, it's still making some pretty nice moves here. And I can tell you from looking at this more closely,
Before
I'll
you
show
go,
you where the strength is.
I'll say before you leave the chart, I wanted to point out that shooting star candlestick for today. The market hasn't closed yet, so it could look completely different than that at the end of the day.
Let's hope. It's also, filled black candlestick. Those are bad signs as well.
Not
because
good
it basically
right this minute, but yeah.
Yeah, it's going to be interesting to see how this one resolves. And with the market itself forming candlesticks that look just like this, it's going to be prevalent on all of the charts. So crossing our fingers that does change and look a little bit more healthy later today at the close. But as you can see, I mean, of them, materials has kind of at least a little bit of a bullish bias there underneath the surface. All right, so let's go ahead, and I want to look at these industry groups. In particular, we'll go ahead and look into materials. I'm giving you a little bit of a heads up. I normally do not give out the sector to watch, industry group to watch from Friday's session, but I did want to give you a little taste of what we do there. I also, once I figured out the industry group to watch, I find a couple of symbols in there as well that you can throw on a watch list. So DecisionPoint Diamonds at DecisionPoint.com. So here's Staples. Remember, this was one that was sort of on the radar. But you can go through and see that not many of these groups look too good. I remember Brewers was looking decent, but it's down almost 0.5%. Most of these are just, food products looks a little bit good because you do have the PMO buy signal going on there, a rising trend that's holding. This is a new PMO buy signal for non-durable household products. This would include stocks like Clorox and Kimberly-Clark. Drug retailers hitting support, but PMO on a sell signal. Soft drinks, PMO rising, but really price not doing much. Tobacco really looking ugly. Distillers and vintners also in a declining trend. PMO sell signal. PMO top beneath the signal line. That's especially bearish. So that was the problem. If you go within Staples, there's just not a lot there that looks that good. We are going to talk about marine transportation in a bit here. Looking nice with kind of a flag formation going on. But this is the big problem, guys, with marine transportation is this very overbought sell signal that has just come in on the PMO for marine transportation. So I think it'll be important if you are in that area to make sure, to keep that marine transportation stock that might be on your radar there. And if it's in your portfolio, keep a close watch on that because that PMO sell signal looks deadly. Nothing really going on. Railroad's having a great day today. I'm not sure what's going on with that. There's probably some kind of news item that I missed. All right, so here we are in materials. So I'm going to go right into gold mining, which is terrible. And this is what's really posing a big problem, I think, for materials is the miners. So gold mining not looking good. But if we go through some of these others, they're not terrible, but I'll show you where the strength actually is. Not much strength here for aluminum. This is where the big strength was, is in commodity chemicals. That's where you got an even larger bullish engulfing. The bullish engulfing candlestick, 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 9 days that this one engulfed. So couldn't get much more bullish than that. PMO is turned up. Everything is looking pretty good for commodity chemicals. But that's really the pocket of strength. I mean, if you go through these, I guess specialty chemicals getting ready to have a PMO turning up. Mining looking just like gold miners. Non-ferrous metals falling off the chart here. Steel looking okay, but the problem is the PMO looks terrible. And we're just getting a new PMO buy signal here on paper. But, when you see a stock or ETF where you're getting this sideways trading range movement, probably best to look elsewhere. Your upside potential kind of gets depressed there. So I tend to stay away from those trading ranges. So really, when it comes down to it, commodity chemicals really showing the strength right now. I showed you the chart, but let's go ahead and dive in and look at a few symbols in there. What I like to do is you can click, I'll show you this, I went fast. So this is how you get the chart from the industry summary. And this is how you get the stocks that StockCharts has listed in that particular industry. And then what I like to do is go through and organize it by the StockCharts technical rank. You can read more about that in Chart School. I recommend that you do. And then I can go through and just hover over the symbols and get an idea of really which ones are kind of leading the charge here. And when I went through a lot of these, obviously this one, Lindy, I don't know, this is a large cap. So there you go. It's a big bullish engulfing candlestick. And in this case, if it had gone just a little bit longer, it could have encompassed just about everything we saw back here. Now you can see it didn't work out so well last time we had a big bullish engulfing candlestick, and we ended up with a reversal. We do see that price is pulling back a little after that big breakout. So we do have to be a little careful here with LIN, but it is within that group. It does seem to be the one that is leading that charge. I don't like Univar. It's moving sideways, like I said, not kind of stock I would be interested in. You can see that RYAM not looking too good. Rainier. But I do remember LYB was interesting to me. It's pulled back. It's bounced off the 50-day EMA and it's on its way back up. Not having the best day, but still showing a rising trend, a higher low, a higher high. So it's not looking too bad. PMO has really started to look ugly though on that one. Dow Chemical, bouncing off the 50-day EMA, still waiting on that PMO. So really you can see the strength has come a lot out of this LIN, and we have to be careful with it. It's a great breakout, but it is looking a little bit shaky there, in my opinion, just because of what happened prior time that we've gotten that bullish engulfing candlestick, a little bit worrisome, kind of trading range like. Want to see this breakout hold and stick. All right. It's 9:30, and I think we're going to have a half an hour for questions
Okay.
and for symbol requests. So
We have a question here. Is there a screener on StockCharts to find ETFs where the PMO is starting to rise?
yes, there's not a predefined one, but it is something that you could do fairly easily in the, I'll just show you the advanced scan workbench. All right, so to get to ETFs, that's your first thing, right? So we come down here, indexes and ETFs. We want all exchange traded or no ultra and inverses. I'm going with no ultra and inverses. And then I just hit add, and that puts that right up there. We need to take this out though, because it says that it's a stock. Well, it's not a stock. It is going to be an ETF. So now we have the ETFs. Now we need to have that PMO rising, I believe is what they wanted. A PMO rising. Okay.
Right.
So we'll go down here to the PMO. And that's the PMO line. That's the actual PMO. The other one is the signal line. So you can make some comparisons between the two. So I'm going to add that. So it's going to say, I want the PMO line to be greater than 0. What we really wanted to do is be the PMO line greater than the PMO from yesterday. So I'm going to copy this. And I love that the way they do this, because it's very intuitive. Yesterday's PMO line. So that's all I'm looking for, right? Is that it's gained strength over the next day. This is going to bring you a lot. I'm just going to tell you that right now, and then you can check your syntax. 72. So 72 ETFs currently have a PMO that is rising. If you wanted, you can sort it by scooter. Here's your stronger ones on the top. So it's really not too hard, but some of these aren't predefined for you. So you have to kind of come up with them on your own. I'll leave this up for just a minute or two. Well, not a minute, a couple more seconds. If you wanted to just copy this particular coding, you can put it into the scan workbench, and then you'll be able to have exactly what we're seeing.
Okay. And we have one of our viewers has an explanation for the pipe bottoms. I'll leave it up there as a 919 entry. I don't want to go over it right now. I just wanted to point out if anybody's interested, it's there.
Excellent. Thank you to the kid. He's the one who sent it into the Q&A, and I believe everybody can see the Q&A.
Okay, and then another question: what does the PMO of 50 mean in plain English? Please elaborate on the math that is used in the calculation. Okay, if you want to get the complete answer to how to calculate the PMO, it's on StockCharts.com in Chart School. It's a free area, so you don't even have to be a subscriber to get to it. And basically, the PMO is calculated from price, strictly price, and it is a moving average of a one-day rate of change. So that is what it comes from. A PMO 50 is just very unusually high. What you've show a PMO chart there, Erin, you got. See, okay, so normal range, as I say, is about +3 to -3. When a stock or any price index is going up at a really accelerated pace, you're going to get much higher readings on the PMO. There's a comparison between the PMO and the MACD. If you just went back higher on back up. There you go. The MACD is not a ratio calculation like the PMO. So as price gets higher, you get wider ranges on MACD. So you can't compare it historically, really. So
Mhm.
that's going on. But I think that's enough of it for now.
Yeah. Yeah. So you can find out all you've ever wanted to know about the PMO. You can use the, like I said, the search box is one way. You can go directly to Chart School and find it under market indicators, technical indicators.
Okay, let's go to the symbols. We got CGBD.
CGBD, what I'm not familiar with. Carlisle. Okay. Okay, we're gonna. You made a good point, Dad. We're gonna kind of not worry about these bearish candlesticks because at the end of the day, those could change. And right now, that's what the SPY has. The S&P 500, most of the indexes show these filled black candlesticks. They are bearish candlesticks. We're going to kind of ignore that just a little bit. If I see these at the end of the day, that's going to change my perspective only by a little bit. Filled black candlesticks next day is when you're supposed to expect a decline. Doesn't always happen. You can see there's one here, there's one there. So they're not always doom and gloom. But anyway, we'll try not to talk about that. CGBD. So my primary indicators are the RSI. This tells you whether price is overbought or oversold based on where it is in this range. It basically takes the last 2 weeks trading range and then tells you where price currently lies within that last 2 weeks trading range. So it really gives you a very good idea of whether price is overbought or oversold. I like to look at RSIs that are above 50. That means they're positive and the price is at the top part of the trading range for the last 2 weeks. So that means it should continue higher. So this is a nice looking RSI. PMO we just talked about. Stochastics I use for internal weakness and internal strength. If it's above 80, it has high internal strength. If it goes below 20, it is very weak internal strength. So I like to see my stochastics above 80 if possible. They'll stay above there. And when they're above 80, lots of good things typically will happen. But at a minimum, we want to see stochastics above 50 in positive territory and rising. I like to then use relative strength of the group that it's in to the S&P tells me if it's got a good chance because the rest of its brethren are going up. And then I do compare the stock symbol to the S&P and to the industry group. And that tells me, do I have a strong member of the industry group that's performing relatively well against its group? So yes, I do. I also can see that it is improving relative strength against the S&P. So I just went through all of my main ones. I also use the OBV. It gives me an idea of what the volume patterns are, but it's not something I generally trade off of or talk about, mainly because we usually see confirmations from the OBV, meaning rising bottoms to rising price bottoms, declining tops to declining price tops. This is where you really want to find those divergences. If there's a divergence, I'll talk about it. Otherwise, I generally don't. So I feel like my charts have everything you could possibly want on them. All right, now that I've done that.
Before you go, I wanted to point something out on your relative strength panels. They have a scale on the right. That's totally irrelevant. You can't compare those to one another. You just look. They really should not carry a scale on relative strength. It's just a matter of direction. That's all you're worried about with the relative strength stock charts.
Excellent. Excellent point. All right. So all of the things that I've talked about are good on this chart, minus that filled black candlestick. We've got a breakout here. It looks like, let's see if we have new 52-week highs on this one. Weekly chart looks good. Looks like it's actually making new all-time highs. We can double check that with the monthly chart. Yes, indeed it is. Oh, I want the default so everybody can see them. So actually, I mean, I like this. I think it looks good. I think we should see some follow through. It is in the financial sector. That sector is not quite that healthy. I didn't look at that in particular, but we do need to be careful with pretty much every stock we're involved in, because you saw every sector is showing negative momentum.
Okay, we don't need to be spending too much time on each symbol here.
Nope, I just wanted to cover the indicators.
Okay, EQT.
All right, RSI positive, PMO rising, stochastics above 80, and improving relative strength across the board. How can we not like this stock? Possibly because of the big decline it's experiencing today, but notice that broke out above the 50 and it's pulling back as is natural when you get a breakout. You should expect to see a little bit of a pullback afterwards, unless you've just got a real strong stock going on. So this looks healthy enough to me. I'm still a little bit nervous about the crude oil charts. They're very, like we were saying, big time trading range going on there. And really, crude oil is going to help drive what's going to happen with a lot of these stocks. Sort of like gold and gold miners. It's not completely tied to the price of gold or the price of oil, but certainly it's going to affect it. I do see kind of a double bottom that is trying to come together here. That's a little bit high for a first bottom on it. But overall, I think I like this chart. I didn't talk about actually trading. So I go to a 5-minute chart to do that. You look for a PMO, 5-minute PMO positive crossover combined with a positive 5-minute RSI, and that's your entry. So this would have gotten you in right around here. Currently, if you like the chart, like I like the chart, it's not a buy point. PMO is still in decline. We might get a better entry point. So that's why I use the 5-minute chart. If you're looking to sell, come to the 5-minute chart, just look for the PMO to start moving down, that 5-minute PMO, and it's going to get you out near the top. So there we are. Now we can go to the next.
Okay, you promised UNG.
I did indeed. All right. And full disclosure, I think you still own it. Do you? I do. I actually do own it as well. So let me try and get, I think this is pretty good. I think I'm going to go to a log scale though, just so we can see the price action just a little better. So we're log scale, so don't really pay too much attention to trend lines. We can pay attention to the fact this is a declining trend. So we got involved in this, I'll just say, I think a little bit too early, because we got involved back here, did have to experience a very, very painful pullback. But knowing it's near its, well, it is at all-time lows, or was at that point, we went ahead and, I know at least I did, I held on to it. So I'm back to a positive right now. Again, filled black candlestick. We have to, it's a hammer, but the hammers need to come at the bottom. Another discussion for another time. Everything looking great on this chart though now. And I was very concerned when I saw that PMO top so quickly. But as soon as we got the reversal here, we got a PMO bottom above the signal line. And that is exceptionally bullish. Well, I won't say exceptionally. It's very bullish. It's more bullish than just getting the crossover. So that's set up well. And notice stochastics just moving out so quickly. And we haven't seen that in months, to be perfectly honest. So I think everything's lining up here on UNG. I think it's definitely a hold. I don't think it's too late to get in. Let's look at the 5-minute chart. All right, if you wanted to get into UNG, it looks like you might get a little better buy point, but I'm not so certain it'll be much better, because you notice that we did have this really bad loss of momentum. But then as soon as price started to turn up, the PMO is still moving down, but that's because we had a nice steady rising trend here. So the fact the PMO is kind of falling here a little bit and price is holding its own tells me that there's, still some momentum under the surface. You can tell me if I'm wrong here, Dad, but I would be looking at an entry probably near where we're at now, just because I think that PMO is going to turn up. And then, we would have waited too long. The RSI has been positive all day. So I think you have price working on your side here, more than likely.
one thing is UNG is just incredibly volatile, so you have to
Yeah,
have.
just be prepared for that. And I know a lot of people, when we got bullish on UNG, decided to go to Boyle, which is the ultra of natural gas. So if you, I mean, I don't know how anybody can stomach the volatility on this one, but it is the ultra for natural gas. I don't certainly.
Try a 1 month on this, so we're not getting any sense of the price movement.
So yeah, this is Boyle. So again, these filled black candles, got to kind of ignore those. Those are bearish. But yeah, you can see that we're finally getting ready to hit some overhead resistance, but be careful here. Again, Boyle is the ultra. This is a 2 times what's going on with UNG.
Yes,
They look almost identical.
Volatile enough, just go to Boyle.
Exactly. And I can't even deal with UNG that much. One thing I do want to bring up that we talked about, Dad, offline was dollar natural gas. It's the actual continuous contract for nat gas. And if we move this to a weekly chart, this concerned both of us. Remember when we looked at it. So we keep talking about UNG at all-time lows. It has to turn. It has to turn. Well, maybe not. This is the continuous contract for nat gas, and it's been lower. So we are at risk here, just so you know. This is not a sure thing.
Okay, let's try COP.
COP. All right, so another one that is going to be somewhat tied to crude oil. Crude oil has been in kind of a sideways trading range, and what a surprise. COP is also in a trading range. Look at this gap support that held. This is fascinating to me. This is what gaps are all about. The gap was formed back here, took price all the way up, and it's finally come down here, but notice it's sitting right at that gap support, and it's kind of right in that gap as well. Looks pretty good holding gap support here. PMO is not really convincing enough for me that I'd get involved. And then notice also the RSI is negative. So those are 2 things that would bother me. If I owned it, I would be holding it just to see if we're going to hold this gap support level, because price really doesn't seem to want to drop further than it is now. It lost the 200-day EMA. I know if I'd seen that candlestick, I'd have been long gone. But if you happen to be holding it, it does show a little bit of promise, but it's not anything I'd be interested in entering.
Okay, EQT, we did that already, didn't we?
Yep.
Mm-hmm. Okay, here's a comment. Abe Cohen developed the percent of, the BPI.
Yes.
Okay.
Thank you for that.
And could you check marine transportation stocks? That says TK. They all seem to be going up. Please take in your discussion.
Yep, absolutely. We did look at that industry group. As a whole, the industry group was showing a topping PMO, if you recall. I can't remember the name of the industry. So you can see that the group as a whole looks a little bit sketchy here because of that PMO. Here's how you could go again and find some more. But I just wanted to point out that the group itself is looking a little sketchy. So we'll see about some of these stocks within TK, obviously looking quite good. Nothing on this chart to tell me that it's going to be falling anytime soon. If you owned it, let's see, where would a stop level? Stop level is going to have to be somewhere in here. I would have loved to have been able to bring a stop down here, but that's a 12% stop. And I don't think that any investment I get into, I'm planning on losing 12 before I get out. So that's unfortunate, but it's had such a strong rally. Today is a follow through day. It's the 4th day of rally. I'd just be careful. The RSI is overbought, but I mean, there's nothing here to tell me it's going to collapse tomorrow, except the fact that it's just been going up so steeply. What was another one?
Yang, Y-A-N-G.
Okay. This is the China bear, so this isn't the same thing. That must be I don't know that that's another. I'm trying to think of another marine transportation, and I can't think of
Oh,
Scorpio as well.
I thought you were looking for the next symbol.
Oh, I thought that they had more marine transportation. Here's Scorpio. Just there's your flag formation, getting a nice move out of it. So this one looks good as well. We just need to be careful if you're in that group to make sure that you're getting something that has at least performing here kind of in line. But more so you want to see these outperformances right here like we're seeing there.
Okay, now Yang.
Now Yang. All right. So this has been one that I like to play. I don't own it right now, but it's one that I use as an inverse a lot of times when the market's not doing well. It looks good. Certainly not having a good day, gapped up. You're not getting a gap back down. So I'd say that that's a positive because, you know, this was really set up. You could have gotten a reverse island, which would mean a gap down and then price. Now it's not out of the woods because it could still gap down and this could be the island. But overall, I mean, the rising trend is holding. PMO is positive. Stochastics have turned down, but as long as they stay above 80, I'm happy. So as far as I can see, this one still looks good. It's just, it's a 3 times inverse. So you just need to really be prepared for days like this, where you're going to get some pretty big price swings, just like we were talking about on UNG. Have the TUMs nearby or maybe position size just tiny so that you don't feel so bad if you have a day that it's down 12%. So.
Okay, XBI.
All right, biotechs, eh? Very much in a trading range. PMO falling and now below the 0 line. This does not look good. I don't see anything good on this chart. Relative strength is failing. Again, I'm not likely to get involved in a trading range if I can avoid it. The bottom of the range is down in here. So you're still really vulnerable to a lot of downside here, at least 9-10% downside. And it could be more if it breaks down below these support levels. So if you were interested in it, I'd be waiting till it gets down to these levels in here before I would be looking for a reversal. But right now, nothing on the chart tells me that we will reverse. Everything is actually pretty bearish.
Okay, Disney to buy for 12-month hold. Please, please advise as my 2 sons wish to buy the stock.
Of course, probably our my nephew Devin wants to buy it. I don't know, but he's always interested in the next big thing. But a lot of folks go with what they know, and a lot of people know Disney. This chart is not looking good. If they want to buy and hold, I don't see this as the place to start. They're going to be very unhappy because more than likely it's going to go down first before it goes up. This does look like a possible reversal, but it's just not, I mean, I guess it's coming off of a fairly strong support level, but this PMO, look at the relative strength. Tell them to go look for another one that at least has got better relative strength. It's in the comm services, which has really done well, but is now starting to fade quite a bit. I'm not a fan of Disney. I wish I could give you another well-known name that maybe they'd like.
How about
it looks better.
Chart? How about a weekly chart?
Yes, if it's a buy and hold, that's true. We could be looking more toward that. I don't know.
Yeah, try a monthly. There, that's why I remember looking. I didn't like it, although
Yep.
It is coming into an area of support. That's for sure.
Yeah. And that's what I was saying. Like for me, I would want to wait on an entry here and see what it does on this level of support. I would just prepare them because the decline, I would say, is at least vulnerable down to this level. That's 19 to 20% to the downside before maybe we get the reversal. So might be prudent to wait a little while on getting into Disney, just so you don't have to endure a lot of downside at the beginning.
Okay, QID.
Ultra short on the QQQ. Well, we're bearish on the market right now. So I would say we would be in favor of a short on the major indexes. The bias would be positive since the bias is bearish for the overall market. That means these inverses, the bearish is bullish or the bias is bullish. These are just one thing I would remind you. I mean, I think that this is going to do fairly well. You can see the indicators lined up fairly well for this. Just remember, number one, this is an ultra short. So it's not just the inverse. These are really hedges. These are not necessarily to invest in, if you will. These are trades to protect your investments. So I would always think of these as very, very short term, and always be careful with your position size on these ultra shorts. Not a whole lot to say there because it's an opposite of the market. I don't like the market, so.
WBD.
Warner Brothers. So here we are back in comm services. Now notice the difference here on this versus Disney. We're getting ready to break out here. PMO is trying to turn up. Stochastics back above 80, and look at the relative strength here. So, if they're interested in something, that they're familiar with, that might be a good choice. Let's see, the weekly chart looks a lot more healthy. The monthly chart on this looks a little suspect because we are getting to overhead resistance here, but the PMO on the monthly chart is moving up. So I like this one better than Disney. I could say that.
Okay, 1 minute left.
Yeah, I think we can close this down. Maybe one more.
ACGL.
All right. Arch Capital looking good. Nothing here on the chart that tells me to get out of it. It's a little overbought, but all the indicators doing what they should. I would expect more follow through to the upside. All right. Stop that share. We got to close this down. It's been great having you all with us. The replay is on YouTube, and it usually goes up around 3:30 p.m. Eastern time. But if you would like to see it a little sooner, you can watch it live on StockCharts TV. Just go to stockchartstv.com and learn more there. That's it for us. Good luck and good trading. And we shall see you next Monday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.